did Meta wreck the rally? This stock is now down 24% on the day, taking tech down with it. Let's pose this question to Gargi Chaudhry, BlackRock head of iShares Investment Strategy Americas, as well as Bloomberg's tech correspondent Ed Ludlow in San Francisco. Ed, let's start with you. This is absolutely brutal. You do not usually see a mega cap stock moving in this way. Is this so much about the results and the outlook we got from Facebook overnight, or is this about a fundamental question as to whether its business model is going to work going forward?
Both, and yes, on your question.
All right.
I mean, you know, I sat down late last night. I've been in for hours reading all of the Wall Street notes, and with the greatest respect to the sell side, did everyone expect the metaverse to arrive in January of 2022? Because quite clearly, that's not what's happened. The outlook, yes, in the near term was worrying. That chart says it all. Growth for Facebook.com is over. Growth is at 0 on a monthly active user basis. But the more telling sign was the acknowledgement from the street of this multi-year horizon for the metaverse. You know, a $10.21 billion loss for Facebook Reality Labs in 2021. Bloomberg Intelligence is saying the worry there is that that translates to 10 percentage points of operating margin erosion in 2022. The metaverse is distant and it's very expensive right now. And by the way, just very quick, guys, I've been on so many earnings calls and many briefing calls with Mark Zuckerberg, and I've never heard him speak so candidly about the headwinds to growth and the headwinds to advertising revenue.
Ed, just sticking with you for a second. I appreciate what you say about the metaverse being a long way off, and I think probably people's timelines were a little skewed there. But nevertheless, the impact of Apple's decision on tracking seems to have had a massive impact here. Is this a Meta story or an Apple story?
Yeah, that's a really great point. And also, you know, Facebook or Meta ended 2021 with $100 billion of revenue for the first time. They actually beat in the fourth quarter. It was the outlook for the first quarter that was poor. Apple and privacy tracking changes are a problem. Remember, the Facebook.com platform relies very much on small businesses.
Yeah.
Small businesses relied on that data generated, third-party data, to inform their ad spending. They don't have access to that data anymore, and that was a real headwind, as was supply chain disruption, as was Omicron. So the advertisers generally pulled forward spending and are holding off now.
Gargi, let's bring you back in here. If big tech falters, can the U.S. equity market survive that?
You know, it's a really interesting question that you have posed to us. I think, you know, obviously the Facebook earnings yesterday are very important, but I think we have to take the broader context as well. So what we're also getting in the U.S. is a Fed that is likely going to start raising rates very soon and is indicating that they'll raise rates very fast and they'll be very nimble around it. And I think the fact that real rates have moved from, call it negative 120 basis points to about negative about 60 basis points in a very short span of time is also another driver of tech. And what has, I mean, if you if you chart it on Bloomberg in terms of what some of the NASDAQ has done versus real rates, you can see that correlation being really, really high. And I think to the extent that we still expect real rates to remain negative, I think we shouldn't lose focus on tech broadly. But where we decide to move in tech is important. So we think quality tech still makes a lot of sense going forward.